Hi guys, welcome back to Tax Q&A. With the tax filing season at peak, we decided to curate some of the most common questions people have around ITR filing, and in today's video, I'll be answering them all. Okay, Vinayak asks, my income is less than 7 lakhs and I have no tax liability under the new regime. Do I need to file the ITR? Yep, you still need to file an ITR. Even though you don't have to pay any taxes because your income is under 7 lakhs, your income is still above the basic exemption limit of 3 lakhs under the new regime. And filing taxes is a must if your income exceeds the basic exemption limit. Next, Yash is asking, my employer deducted TDS under the old regime, but now while filing my ITR, I see that the new regime is more beneficial. Can I switch now? Absolutely. See, you usually tell your employer which regime you're going for at the start of the financial year, and they deduct TDS based on that. But when it's time to file your ITR, you can compare both regimes and pick the one that saves you more money. So yes, you can definitely switch to the new regime while filing your ITR if it works out better for you. Okay, now Keshav is asking, I switched jobs during the year and my new employer did not deduct any taxes since my total taxable salary was below the taxable threshold. When filing my ITR, am I required to pay the remaining taxes based on the combined income from both jobs? This discrepancy comes in when you switch jobs midway during the financial year, and oftentimes people end up with more tax liability despite both the employers deducting TDS from the salary. See, this can happen due to various reasons. Your salary might have been increased, placing you in a higher tax slab. Both employers may have considered the basic exemption limit and various deductions while calculating your tax liability. Or, as in your case, the salary from your previous employer was not considered at all by the new one while calculating your TDS. So, in situations like these, you'll have to add up what you earn from both jobs to get your total taxable income and figure out how much tax you owe on it. Then, look at how much tax your previous employer has already deducted. If there's any remaining tax liability after accounting for the TDS already deducted, you will have to pay it when filing your ITR. Okay, now Surbhi is asking, the TDS is deducted by the bank for the interest earned from FDs. Should I again add that interest amount as the additional income in the ITR and pay tax again as per the slab rate? See, banks are required to deduct a TDS of 10% on interest credited against FDs. But interest income is taxable at slab rate. So, if your total income falls in the higher tax bracket, you will have to pay additional tax on the interest earned from FD. Now, the TDS deducted by the bank earlier can be claimed as a tax credit while filing your ITR, which means whatever TDS was paid will be deducted from your total tax liability. You can find these details in your Form 26AS available on the Income Tax portal. Now Siddharth is asking, I received some shares as gifts from my dad and also have some profits from a buyback. These are tax exempt incomes. Do I need to report them in my ITR? Any income that you receive should be reported in your ITR regardless of whether it is taxable or not. There's a section called Schedule Exempt Incomes, where you report stuff like gifts from family, profits from share buybacks, even money from a life insurance policy maturing. Basically, any income that is not taxable as per the Act. These values are not added to your taxable income and you won't have to pay any taxes. But disclosure is mandatory, so you don't end up getting notices. Next up, Neha is asking, I am an NRI. I do trading in the Indian share market and have some income. TDS was already deducted on my profits. Do I need to file an ITR? Can I claim a refund of TDS? For NRIs, TDS is applicable on almost all types of incomes that they earn. So, if you invest in the markets and earn profits, those will also be subject to TDS. In such cases, filing an ITR is also a must. As an NRI, you're only required to report the income that has been earned in India and pay tax on it. You can also claim deductions and exemptions, and if the resulting tax liability turns out lower than what was deducted in the form of TDS, you'll get a refund of the same. Next, Akash is asking, do I need to report my F&O losses in the ITR? Is a tax audit necessary in this case? Audit applicability depends on your trading turnover and not the profit or loss amount. For F&O businesses where 100% of the transactions are cashless, the turnover limit for an audit is Rs 10 crores. Also, why not report your losses? You can set them off against other incomes that you have and carry them forward for future years. This can reduce your tax liability not only in the current year but also in the coming years when you make profits. Next up, Ishan is asking, when will I get my refund after filing the ITR? So this depends on when you file the ITR. The earlier you file, the earlier it will be processed and you'll get the refund in your bank. It usually takes around 10 to 15 days, but in some cases it might take longer. Next, Harsh is asking, I forgot to report some of the incomes in my ITR. Will I receive a tax notice? If there's a mismatch between your actual income and the income you have reported in the ITR, there are fair chances of you receiving a tax notice. However, don't worry. If you've noticed the error already, you should file a revised return and report the income that you missed out on. You'll be just fine. Next, Jay is asking, I was abroad for most of the past financial year. How do I determine my residential status? Will I be considered an NRI? Okay, the residential status is very important when you file the ITR. This is because if you're an NRI, only incomes that you earn or accrue in India will be taxable. Whereas for a resident, all incomes, including what you earn outside of India, will be taxable here. To determine your residential status, you'll have to check the number of days you've lived in India during the financial year. There are two criteria. You have stayed in India for more than 182 days during the FY, or you've stayed in India for at least 60 days in the FY and more than 365 days in the preceding 4 years. If you fulfill any one of the above criteria, you'll be a resident, otherwise a non-resident. There's also something called a not ordinary resident. Details are covered in this thread. We'll link it in the description for you. And that was the last one for today. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one. When I say I, you say, scream. I scream. Should I again add that interest amount as the इसके आगे नहीं मिलेगा मेरा आंसर क्यों दूं मैं तुम्हें इतने में इतना ही मिलेगा I would rather jump right now from this building to the next and become a ninja. वो डर गया मुझसे He's like यार ये तो खुरुंदी है खुरुंदी क्या होता है I don't know ऐसे ही वर्ड बना दिया मैंने बस साइलेंस